overall. Ended the period up a little over 13R in 2.5 months, which is, honestly pretty decent. Again, this strategy is a lot simpler than Burns' model, for example. So if you like the simplicity of this one, it could be a good one for you. What's up, guys? It's Ox Fibonacci, and I'm excited to share with you guys this Nexus Blast trading model that Matt, the CMO of FX Replay, shared with me a little while ago. It's not too dissimilar from the Burns Globex model I shared with you guys recently, but this one's a little simpler. So if for those of you that have a hard time with the complexity of Burns' model, this could be a good variation for you guys to try out. So overall, this is going to be on the 5-minute time frame. He has a strategy on S&P 500, the CFD pairs, primarily where he trades, and he enters during 8:30 to 4 p.m. Eastern, so pretty much New York session, a little bit of pre-market as well. The strategy is pretty simple. Just looks for a sweep of the previous London higher low, followed by a break of structure with some imbalanced fair value gap, and then he basically enters on a retest of the fair value gap and looks for 2R. He does use kind of two different, levels for sweeps. This kind of London one, he simplifies just as like the midnight to 8 a.m. Eastern period. And then he also will use this kind of like New York AM time for kind of additional sweeps for afternoon trades. But just for simplicity, I'm going to focus on just the London sweeps for today. So that's kind of the bread and butter of the strategy. For a few of these concepts, let me go in a little more detail. So breaks of structure, for those of you that aren't familiar, is basically a kind of candle closing in a different direction, kind of from the way the trend was kind of before. So you can see with both these examples, the price kind of closed, in this case, above the wick high and indicated a break of structure to the upside. And in the second example, you can kind of see price was trending to the upside, and then we had a candle closing below a previous low wick, and this is kind of a break of structure that we use for today. There's also a concept ICT uses called premium and discounts. Basically just take the kind of high and low of the recent range, and the lower 50% is the discount range, the upper 50% is premium range, and the whole idea with this is we only want to be shorting in the premiums, when price is relatively expensive, and we only want to be longing in discounts. So regardless of, where, like, if the trade meets our other criteria, we need to also make sure that we're following this premium discounts methodology. Fair value gaps or imbalances, most of you guys should be pretty familiar with it, but just to review real quick, it's essentially 3 candle structure where there's non-overlapping wicks on kind of either side. So both of these, you can see the kind of wick high before and the wick low after this candle did not overlap, and basically created this imbalance, this fair value gap, which often can kind of act as support for price to continue to the upside, or vice versa as resistance for a move to the downside. Specifically for his model, he has a few factors for higher probability setups. The one that I'm going to require today is basically the fair value gap needs to be created on or before the break of structure, and this will actually make it easier for us to identify the trades as well. You need to basically see a fair value gap lining up with or before the break of structure. Otherwise, it's not as strong of a reversal, and so we're going to ignore trades that don't follow that. He said there's a couple other factors that can increase the probability. If you have your fair value gap overlapping with a inverted fair value gap, which is also called the balanced price range, that can increase the odds. But he said it's kind of more of a nice to have. It's optional for his strategy. And he says there's also, potentially higher chance of the trade working out if it occurs during these silver bullet hours that he outlined. But again, this is kind of just a nice to have. We're not going to require that. It's mainly just this one. The fair value gap needs to be made on or before the break of structure for us to consider the trade. For the entry and stop loss, it's pretty simple. We're going to enter on a retest to the fair value gap that was created on or before the break of structure. Stop loss is just going to be the most recent lower high that took place, and then essentially all we're going to do is target out the nearest liquidity pool, or essentially high or low, that gives us at least 2R, or if that's too far, you can also use the midpoint of the trading range, the premium discount, kind of the midpoint. If that gives you 2R as well, you can use that. And then he uses stops to break even after the trade goes 1R in his favor, and he does kind of do a lot of trims in the kind of example videos that I saw, but just to keep things as simple as possible, we're just going to go break even after 1R, and otherwise let it play out either a 2R win or a break even. So a couple examples, and I'll actually pull this one up on the chart here. You can see here we have kind of the London session is kind of this period before where price was consolidating and then started moving to the downside. And at essentially 8 a.m. Eastern right here, this is like the end of kind of the London session he'll use, and we saw a sweep of this low. Price kind of continued below this kind of London time period that he talked about, and then from that point on, we're really just looking for a break of structure that lines up with the fair value gap, which we got right here. So this 1035 candle, 5-minute time frame closed above the kind of wick high that you can see here, giving us a break of structure, and there's also a fair value gap created with that candle. So it gives us everything we need for the strategy. We'll enter on a retest of that fair value gap and just use the most recent low as our stop loss. In this case, I believe the target was just this high over here that gave us a little over 2R. The midpoint didn't quite give us 2R, so that's why you targeted out this high instead. It ended up being a really nice win. So you can see with the strategy, we had our sweep, break of structure, fair value gap, entered on the retest, and kind of targeted out for 2R. Didn't go up 1R and come back break even, so this one just rode out for a nice win. I also have a short example here. Same thing. We had a sweep of kind of the London high, followed by a break of structure of this low over here, with this candle closing below that also coincided with our big fair value gap. You entered on the retest of the fair value gap, almost got stopped out, not quite, just using the kind of recent high before the trade went to the downside, and then targeted out 2R, which played out nicely. Few other rules that he uses, the distance from kind of your entry to your 2R TP has to be at least like a $10 move on the S&P. He calls it handles. It's the same thing, basically $10 move on the S&P. And then something that I was seeing when I was backtesting this is it's probably also best to not go for like too ambitious take profits. So rule for that could be, the take profit can't be past the higher low of the day since midnight as well. That'll improve your profitability too. He avoids red folder news like the plague, so we won't have any trades kind of near red folder news. And then if you're looking for a short, price has kind of swept the London high and you're waiting for a potential short entry, but then price sweeps the London low, it's basically going to invalidate that potential short. So if it sweeps the other side of the London higher low before it kind of tags you in for your entry, that's going to invalidate the trade setup for that side. He didn't really have any specific guidance on what to do when there's multiple fair value gaps. Maybe there's 2 or 3 candles in a row that have fair value gaps. So what I've kind of figured out is probably the best way to do it is use the second to last one. So if there's 2 candles in a row with fair value gaps, use the second one. Or if there's 3 fair value gaps, use the middle one. Otherwise, you're mainly just trying to use the one that was created kind of during the break of structure, as long as it's in the right premium and discount range. I always like to give you guys some optimization considerations with the strategy. You could potentially consider using local highs and lows versus kind of the bodies. Bodies instead of the wicks. Maybe you can play around with, is 2R a good level to target for the strategy, or maybe you want to look for 3R instead. There might be some opportunities for trailing stop loss versus just kind of taking it all off the table at 2R, and then also you could play around with when to use partials or potentially, if or when to go break even. And probably the last consideration is using the actual London session, which is currently 3 a.m. to basically 9:30 a.m. Eastern, instead of his simplified midnight to 8 a.m. window. And then on his website, he has a bunch of resources. You can actually get some additional kind of access data that he's gotten. It's not with FX replay, so it doesn't give you as good of data, but if you're backtesting it, you can kind of reference it to compare with the trades you're seeing. But he has kind of a checklist, which is where I got most of this stuff from. So with that, let's go ahead and dive into the backtest. And I really want to start by showing you guys this really cool feature called checklists. So within FX replay, you can come into this checklist tab over here on the left and add a checklist. Say you have a strategy and you're having a hard time figuring out, I want to make sure I follow all the rules, and this is a really good way to basically add all the different criteria that you need for a valid trade setup. And once you come in here, you kind of just type what it is, add it, tell it if is this required or not. Maybe it's optional, something that's optional. And then after you save it, when you come into the chart here, as you can see, we've got a potential Nexus blast trade here. When you place your trade, which I'll do real quickly. So in this case, we got 2R about the midpoint, so I'll go ahead and use that for our take profit. When I come here and place the order, now I'm going to go auto break even after 1 hour. If you click this save in journal button, sorry, 1 hour here, it pops up this cool dialog that allows you to just take a screenshot of the trade setup and then also pull up your checklist, and you can kind of run through, like, does this actually meet all the criteria for this trade to be valid? Otherwise, maybe I shouldn't take this trade. So we have our sweep of the London high or low. There's no red folder news. We are in premium for a short, so we're in the right zone for the trade. We've got a break of structure candle, candle closing below a previous low that also had a fair value gap kind of on or before it. And do we have a $10 move? Got to move my cursor here. Yeah, we have more than a $10 move from our entry to take profit. So all the criteria is met for this strategy, so we can kind of check everything off on our checklist. If there's additional tags you want to record, just such as different entry triggers or different things you want to basically toggle the analytics, you can add different tags here. And then you can also play around with like confidence levels or trade ratings and notes, anything you want. You know, maybe you could write here London high sweep or anything else you want to record, so you can save it, and then that'll be saved out in your journal for later. So as we go ahead and kind of see how this trade plays out, got tagged in pretty much immediately and ran into our take profit nicely. Now when you go back into your journal, you should be able to see, if I remove my filters real quick, this most recent trade. If I open it up, it shows kind of all the information that I recorded, and then if I want to go back and maybe edit some things, I can kind of come back in here and change anything I want for additional notes or things like that. So it's a really helpful tool and a really good way for you guys to make sure you're sticking to the rules for your strategy. So yeah, I'm gonna go ahead and do a little bit of speed back test here, just go through kind of as many trades as I can in the next 30 minutes or so, and then we'll take a look at the analytics. So alright, so we've got our next trade here, and as you can see, we got a London high sweep. We waited for a break of structure from this candle right here, closing below this previous low. We've got a fair value gap that lines up with it as well, so we'll take a short here, use the most recent high, and target out to R about right here. I'm going to place the order, sell limits, auto break even after 1 hour. Save and see how this one played out. So we got tagged in and unfortunately went break even pretty quickly. So this looks like a good example where going break even actually saved us from a loss. So it didn't quite get to our take profit. It stopped at the midpoint of the range. Alright, so this next trade, we do have a little bit of time here before this red folder news, so we're going to see if we can let this one play out. So we've got our sweep to the London low, followed by a break of structure that lines up with a fair value gap. So I'm going to enter on this retest of a fair value gap and target out basically the midpoint right here at 2.38R and see if we can get this trade before the news hits. So we get tagged in. And this one actually went break even before it hit our take profit. So after we got tagged in, we went up over 1 hour and then came back to our entry here. So this one ended up being break even. It looks like it did eventually run to our take profit, but we got stopped at break even kind of before it went to the take profit. So as you can see here, these last couple of days did not have any trades. There were breaks of structure on both of them, where we had, you know, sweeps above the London highs and then breaks of structure, but then there was no subsequent retrace to the fair value gaps until like the market was closed on this day, and then this one never retraced at all. So sometimes you won't be able to catch the moves entirely with a strategy, but better to wait for the good setups and like sit on your hands otherwise. All right, so we had a couple trades on this day. We swept the London low here, so we're looking for a long. We've got our break of structure, candle close above this previous wick high, and we've got a fair value gap created from this candle. So we will look for a long right here using the most recent low as our stop loss and target out to R, which I think is the London high. I'll place the order here, buy limit to auto break even after 1R. I believe this one was a break even trade. So we got tagged in, went up quite a bit, and then ended up stopping us at break even. So let it play out and see if we can get another market structure shift for a second attempt at this one. So right here we have a market structure share or break of structure, a candle close above this previous high. We're still looking for longs because we've swept the London low and we haven't swept the high yet, so longs are still valid. We just got stopped break even on this first trade, so I'll pull this back over here. Stock break even basically. And in this case, there's two fair value gaps back to back. So I'm going to use the second to last one, which would be the kind of most recent one. Use the low as our stop loss. And where's my 2R? Looks like this level right here. This high over here on the left gives me at least 2R. So I'll place the order, auto break even after 1R. I can select it and see how this one plays out. Nice, very quickly 2R take profit. Love to see those trades. So one break even trade and one win on this day. So this day we have a short trade. We've swept the London high and trended up for quite a while. We're waiting for a break of structure, which we finally got here with a candle close below this previous wick low with a fair value gap that lined up with it. So we'll short at the retest of fair value gap and target out a low that gives us at least 2R right here. Place the order, auto break even after 1R. And see how this one plays out. So we got tagged in and ended up coming back to break even. So got tagged in, price went up a little over 1R, which moved our stops to entry. And at that point, once it came back to our entry, we got stopped at break even. So break even trade on this day. This is an example I'll show you guys of kind of why it's good sometimes not to take trades when your take profit is too ambitious. So right here you can see we did sweep the London low. We had, yes, you fix this premium discount. We had a break of structure right here with a fair value gap, so you could have looked to enter on the retest, but to get to R, we'd have to go beyond the kind of high of the day for this London session. So it's kind of a pretty aggressive take profit, and better to kind of pass on these trades. You can see here it saved us from a loss. So this criteria can help save you from more losses than wins, kind of from what I was testing. So this isn't a trade that I would have recorded because the take profit was beyond the kind of high from the London session midnight to 8 a.m. All right, so this day we have a sweep of our London low here. Took us a while to get a break of structure, but we finally did get a candle closing above this previous wick high. I'll zoom in a little so you can see better. So we got a break of structure and we have a fair value gap created. So enter on the retest. I'm going to use the most recent low for my stop loss. And where's my 2R take profit? Looks like I can target the midpoints of this trading range for my 2R in this case. So auto break even after 1R and see how this one plays out. So we got tagged in. Stop is now break even, and nice 2R take profit. So nice quick win on this day. So on this day we had a sweep of the London high, so we're looking for a short. There was some pre-market news that we wouldn't have traded during, but it's been a little while. There's no ongoing speeches or anything, so retest of this fair value gap is valid for a short as long as price doesn't take out this London low before then. So go ahead and place an order. Looks like this low right here is basically where I got my take profit from. I'll place my order, and we'll save and see how this one played out. So it didn't take the London low yet, so the trade is still valid if it comes back up and retests. Looks like we get tagged in right here. Our stop would be break even now, and ended up running to our take profit. So nice win there, and a good example of as long as it doesn't take the other side of the London low or high, the trade is still valid if it comes back to retest your level. So here's an example of when you wouldn't take a trade because it's not in the correct premium and discount level. As you can see here, we did sweep the London high, and there was eventually a break of structure that had a fair value gap. However, the entry for this, using the retest the fair value gap, would have taken place in the discount range of this trade. And we only want to take shorts in the premium, so this would not have been a valid setup just based on the premium discount. This trade was pretty late in the day, but we did have a sweep of our London high, and it took a while, but we eventually did get a break of structure right here with a fair value gap, so we can do a short here at the retest fair value gap using the high at our stop loss and target out 2R, which looks like this low would give us that. So let's see how this one plays out. Auto break even after 1R. So this ended up being a quick loss. So overall, we're still at about 5R in about a month, a little less than a month, so not too bad. We'll see how the next month is. All right, so this next day we have a sweep of our London high, so we're looking for a short. It took a little while, but we did eventually get a nice break of structure here with a fair value gap. So we can see here we got a break of structure, and we will enter on a retest of this fair value gap using the high as our stop loss. This low is our take profit, so place order, auto break even after 1R. See how this one played out. So this ended up being an almost immediate loss. So a couple losses in a row, but that happens with pretty much any strategy. All right, so this next day we have a sweep of our London low, so we're looking for long. We had a market structure shift, a break of structure up here, but there was no fair value gap, so still waiting for a break of structure that has a fair value gap. And as you can see right here, we had a candle closing above this previous wick high and a fair value gap created. It's pretty small, but it's still valid for the strategy. Use the most recent low as our stop loss, this little wick low right here. And it looks like this high right here gives us at least our 2R. So go ahead and give this one a shot. Auto break even after 1R. Save and see how this one played out. All right, another loss. So definitely have a little bit of a loss streak going here, but we'll go ahead and see how the rest of the month plays out. All right, so on this day we have a sweep of the London low, so we're looking for longs, and this is a case where I'm going to show you guys what to do when there's multiple fair value gaps. I think the best thing to use is to use the second to last one, so basically the middle one in this case. We use the recent low as our stop loss, and looks like we would need to target out this London high to give us our 2R take profit. So place an order here, buy limits, and see what happens. Get tagged in barely, and then price runs nicely to our take profit. So would have been really close whether you got filled or not, but it looks like we barely just got tagged in this case. This next day we have a sweep at the London low, so we're looking for longs. We did have a break of structure right here before, but there was no fair value gap that lined up with it, so we need to wait for both of those to be present, which we got a little bit later. We got a break of structure and our fair value gap that lines up with it. So I would look to enter on a retest, and looks like this high gives me at least 2R. So go ahead and place an order here and see what happens. So we made a higher high, but we have not been tagged in yet. I would probably adjust my take profit to this new high now, which you can do with just adjusting the levels on the charts. And as long as it doesn't take out this London high before it tags us in, this trade's still valid. So we get tagged in a little bit later, and then it runs to our take profit. So had to be a little bit patient on this one, but ended up playing out and being a nice win. So we have a couple trades on this day. This first one here, we have a break of structure with a fair value gap, and it's in the premium, so valid trade setup here. Looks like this low here would give us our take profit. Do we have at least a $10 move? Looks like just barely, about $12, so it's still valid for that too. Auto break even after 1R. I believe this one ends up being break even, yeah. So we went over a little 1R in our favor and then ended up being stopped at break even. And then a little bit later in the day, we had a second setup. So as you can see here, I'll move this over so you can see it a little better. We had another break of structure with a fair value gap, so we could look to enter on a retest of this fair value gap. And it barely lined up with our premium and discount. If you had to draw this all the way over to the trading range, the entry was barely in the premium, so it would have been a valid setup. Our take profit looks like probably this low right here maybe, giving us at least 2R. So I'll place the order, auto break even after 1R. See how this one plays out. So we got tagged in. Price went 1R in our favor, and we got stopped out break even, and eventually it did go to our take profit, but using his trade management rules, this would have been a break even trade. So 2 break even trades this day. There's going to be a lot of break even trades with the strategy using this methodology, but you can, once you get large enough sample size, kind of decide if you want to go break even or not, or just kind of let the trades play out and see if it's better to do that. All right, so this next day we have a sweep at the London high, so we're looking for a short. We eventually get a break of structure in the premium zone that gives us a fair value gap above it. So we'll enter on this fair value gap, use the most recent high as our stop loss, and target out 2R with this one. Auto break even after 1R. See how this one plays out. we got tagged in there and pretty much immediately break even. This one, however, did save us from a loss going break even. So it's going to do both. You're going to have some trades where the break even works out in your favor and some trades where you wish you would have held the trade. All right, so this day we have a sweep at London high, so we're looking for shorts. We have a break of structure right here with price closing below, and there's two fair value gaps. So I'm going to use the second to last one, which would be the lower one in this case. Use the most recent high as our stop loss, and where can I get 2R? Looks like this low right here gives me at least 2R, so I'll use that and see how this one plays out. Auto break even after 1R. Almost gets stopped out, and if price eventually runs through our take profit. So really nice stop loss placement on that one. All right, so this next day we have a sweep of the London high, and we're looking for a break of structure with a fair value gap, which we eventually get right here. So we're looking to enter on a retest of the fair value gap, stop loss of the recent high, and looking for a low that gives us at least a 2R take profit. So we'll do a sell limit here. See how this one plays out. Got tagged in and pretty much immediately went to our take profits. So it's been a little over 2 months at this point, and we're up 11.5R, which is not too bad, honestly. All right, so this next day we have a sweep of the London low, so we're looking for longs here. We do have a fair value gap that was created a little bit before this break of structure, and this is a little bit of a unique case where the fair value gap has technically already been tested, but according to his rules, you don't have to use totally fresh fair value gap, so we can go ahead and give this one a shot. I'll probably just go ahead and use the low before the fair value gap though, to give myself a little room instead of having a super tight stop loss. To give myself 2R, I would need to come up here to this high. So I'll see how this one plays out. Place order, auto break even after 1R, and then see how this one plays out. So we got tagged in, came up, now our stops break even, and ran to our take profit. So really nice, and it did work out. I just had to use if you have maybe non-fresh fair value gaps, maybe just use a little bit more conservative stop loss. This is just a single case, but it did work out. So it looks like you can use fair value gaps even if they've been tested already. I think there was another trade later in this day. Let me just get to it. So we tried to do the upside for a while. This is a good example where your trailing stop losses might actually be really nice if you were kind of following this up based on market structure. You could catch quite a bit on this one, potentially, I don't know, over 5R in this case. So something to consider with your optimizations. So we do eventually get a break of structure, and this is kind of a unique case. You can see here we were making like lower lows, but they were all wicks. So I didn't really classify this as a break of structure until like this, most recent wick low was actually like price closed below it. So we've got a break of structure. We have a fair value gap above. So I'll use this level as my entry, and for 2R, it's just the most recent low it looks like. So I'll place order here, auto break even after 1R. See how this one plays out. So we got tagged in, and it ended up being a loss. Yep, I believe so. Yeah, it didn't tag us in before, and then it didn't run more than 1R, so this is a quick loss. Alright, so this one we had a sweep at the London low. We were looking for longs. There was some news pretty early in the session, so I probably wouldn't have taken any trades early on. But then later in the session we had a break of structure with a fair value gap, so we can give this one a shot. We'll use this most recent low as our stop loss. And it looks like this high here is the most recent one to give us 2R plus. Would be pretty nice if we hit this one, but let's see how it plays out. So we get tagged in and auto break even, took this one out. Let's see if it ended up playing out or not. Nope, the auto break even saved us from a loss in this case, so worked out. This day we have a sweep of the London high, so we're looking over short, waiting for a market structure shift, which we finally get right here. Got a fair value gap created, so we'll look to short on a retest fair value gap, use the recent high as our stop loss, and use this local low as our 2R plus take profits. Auto break even after 1R. See how this one plays out. So we get tagged in, stops to break even now, and arrange our take profit. So nice win on this one. That's probably about good enough for today. Let's go ahead and take a look at the analytics. So overall, we took about 26 trades. 10 of them were break even, which is a pretty good amount. We did eventually, start to see a slowly increasing equity curve. You can see we gave back about 6R in kind of this period from kind of late January to late February. So a little bit of the drawdown in this kind of month, which is pretty common. But overall, ended the period up a little over 13R in 2.5 months, which is, honestly pretty decent. Again, this strategy is a lot simpler than Burns' model, for example. So if you like the simplicity of this one, it could be a good one for you. It's just going to take a little more time to kind of build up the equity curve, but we do have a steadily increasing equity curve, even though there was, some period of drawdown. So overall, it does seem like the strategy is profitable. You just, have to take some time to put it together. But yeah, let me know if you guys have any questions with this. But overall, hopefully it was helpful for you to learn the strategy, and I'll catch you guys later. See ya.